Let's take about a few minutes to have a little bit of a panel of discussion and a bit of a Q&A to get to wrap our heads around the entire CGRS. And to lead us to do this with a few number of individuals, put your hands together, please, for Tinuade Awe, who is the Executive Director in charge of Rules and Regulation at the Nigerian Stock Exchange.
Good evening, distinguished ladies and gentlemen. You're very welcome to this event. It gives me great pleasure to be moderating a panel of such distinguished individuals as I will call up to come and discuss issues on corporate governance. The first person that I would like to call is Mr. Akim Oyewale. Akim is the CEO of Stanbic IBTC Nominees, which is the custodial arm of the Stanbic IBTC Group. And Akim is responsible for investors in this capacity with over 6.5 trillion naira in assets. Akim, please sit down here. Thank you. Next, I would like to call Eme Essien-Lor. Eme is the country representative for the International Finance Corporation, the IFC in Nigeria. Please give her a round of applause as she makes her way to the podium. And as Emma is walking up, I'd like to call Professor Fabian Ajogu, SAN. Professor Ajogu is a partner at Kenna Partners, and he's also a professor of corporate governance at the Lagos Business School. Finally, I would like to call Brian Egan. Brian is the CFO of Dangote Cement PLC, which is a company listed on our premium board. Our expectations are that this panel, with individuals from different areas of the market, will be able to digest the issues very appropriately with respect to corporate governance and really give us a fulsome time here this evening, and that we will see that that has been done through the questions and answers that we will get. Akim, I'd like to start with you. So there are certain initiatives, such as the corporate governance rating system. This evening, Oscar spoke about a corporate governance index. The corporate governance index will be available on the exchange tomorrow. And then we also have a premium board where one of the eligibility criteria for that board is that you have to have 70% in your CGRS rating. As an investor with so many assets under your custody, what do you think those initiatives, those things that I just listed, what do you think that they will do in terms of your investment decision? Are they important to you as an investor in determining where to put your funds?
Thanks so much, Tinu, and I would like to say thank you to the Nigerian Stock Exchange and the CGI for introducing the CGRS index into the Nigerian market. From our interactions with investors, investors till now, they've actually on their own decided to create in their respective offices what they term to be their own version of the corporate governance index of various companies in the Nigerian market. And this they do for all companies where investors invest across the globe. Companies are usually a reflection of their directors. And because of this, where you have a company that has a very strong corporate governance, you see investors flocking towards such a company, especially if such a company is actually producing good numbers in terms of their profits. I would like to, however, mention one thing which investors find very, very important when you talk about corporate governance. They do not like surprises. So they believe that when you have very strong independent directors outside of the executive directors of the companies, that is a sign that that company is keeping corporate governance as one of its key tenets. And we've seen several examples on the Nigerian Stock Exchange. Even during the time the country was in a recession, during the time that the stock exchange was actually not performing so well when we had a bust. Companies that had very, very strong corporate governance still had investors piling in. And there is something we usually see as a trend, and that is that such companies usually have a very well-equipped investors relations team. They have CEOs and CFOs that are investor-friendly. They are always ready to speak to investors whenever they ask to speak to them and understand their strategy. They are not afraid to actually issue profit warnings when it was necessary for them to do so. And these companies always ensure that they had regular conference calls with investors. Now, these are all things that a company with a strong corporate governance would like to do. They want you to understand that they have nothing to hide. We are running our business. If we are challenged, we'll let you know. If we are doing so well, we'll let you know. We give you forward guidance on how we're going to perform. And where we think those guidance may not be achievable, we'll come to the market and we'll let them know as well. So, and I think that with the new index being launched by the stock exchange, that's going to help a lot of investors in actually realizing which companies can we actually look at, that are already high up there in terms of the corporate governance index. So I think this is a good thing that the NSE is doing. This is a good thing for the market as a whole, and I believe that it will encourage more and more companies in Nigeria to actually uphold the tenets of corporate governance. Thank you.
Thank you very much, Akim. So you think that companies that are able to interact, have a governance process for interacting appropriately with investors will do very well, and that the corporate governance index also actually makes it easier for investors. They don't need to do the back-end work that they've been doing with respect to creating an index on their own because there's an index that's available at the exchange. Okay, on that note, I would like to move on to Emma. Emma, the IFC has done a lot of work on corporate governance, both in Nigeria. I know that you had a program in Nigeria, and you have a program in several other African countries, and just generally around the world. When you've seen initiatives like the corporate governance rating system, or a board on an exchange where one of the major eligibility criteria is a corporate governance rating at a certain level, what have you seen in other countries? How has that affected the national ceiling, if I may say so, of corporate governance in such countries? There's one beside you, Emma, but whichever one, okay, you want to look at me.
Thank you for the question, and it is good to be here at this event. I think one of the key things for us to keep in mind is that corporate governance is both an art and a science. So we know that there are standard processes that companies can put in place to ensure that they, quote unquote, tick the box on corporate governance. So that is something that it's well accepted across all the markets where we work. We've seen a lot of progress in that regard. But I think where it becomes interesting is where the art part of it comes in. And this is where it's important to, or at least what we've seen across the world, is that every country will have their own journey around this. So if you look at Brazil, that introduced their board, the Novo Mercado, about, I guess, 15 years ago, more than 15 years ago now. If you look at Turkey, who's also introduced their own sort of corporate governance index for their country, what you've seen in those cases is that it was very much a journey. I think Oscar talked about the fact that this is a journey. It's not a destination. And for each and every one of these situations, they had to take into account the specific cultural dimensions for their countries, and so how investors react to certain things, and they had to adapt. And so I think particularly in the Brazil case, when they sort of reflect on their experience being sort of the first country to kind of embark on this exercise, vision and leadership are two of the things that I think they were very good at. And the other piece of it is really perseverance. And so one of the things that we've seen is that when these initiatives are kicked off, there's a lot of enthusiasm, there's a lot of excitement, but I think the magic is going to be in the staying power of the companies who are participating, the staying power of the NSE to ensure the highest levels, so you don't have a situation where people are doing this tick box exercise where it actually doesn't mean anything. And we get to a point where there's really that kind of differentiation. Ultimately, we should see value for companies that are rated as corporate governance compliant or whatever you want to call it. So certainly there'll be value for investors in that regard. But in order to make sure that it's not sort of a whitewashing exercise, that level of perseverance, making sure that sort of you're evolving to those highest standards is going to be key going forward. So again, Nigeria pioneers in a lot of different things. This is another one. I think maybe second in the continent. But I think that's what we'll be looking for. Can we stay the course so that companies that are listed here, when we look at those companies, we should be able to nod our heads and feel like these companies do demonstrate, they do model what good corporate governance is, not just for a Nigerian standard, but for a global standard.
Thank you, Emma. I think Emma is reminding us that it's a marathon and also reminding us that it's not a tick box exercise. And I think for the exchange, taking the feedback about ensuring that you're not helping to whitewash and ensuring that we keep at this and ensure that folks keep to the corporate governance standards for real, not just as something that's a whitewash, as I said. Okay, so I'd like to move on to Fabian. And Fabian, you're interesting in the sense that you're an academic. You also consult for corporates and regulators, as with your recent role with the code for the National Communications Commission, the NCC. And so when you have an initiative like this rating system, or when you have an index, when you're consulting for a corporate in terms of their competitive edge, what role does an index like this play? What role does a rating like this play in ensuring that you sharpen that competitive edge, especially in an economy like this that's recovering from a recession and where we have all sorts of disruptions to business? How can this be something that corporates can parlay in a real sense of it?
Thank you, Tinu. It's interesting. There are so many people who think that the best way to enforce corporate governance is a sanction method. Now that works very well with a number of regulators, but it's also received wisdom that sometimes the stick and carrot approach go together. I see the new system as something which would encourage companies to compete in that space of who is going to be regarded as a very good company that observes the best practices of corporate governance. But there is some sort of note of caution that I would sound with the benefit of research in the field. The good man and my good friend Soji Apampa mentioned in his opening remarks that certain companies, certain people got away with doing not the right thing or did things the wrong way. Now, when you look at right, wrong, you could also deduce ethical, unethical. Now, I must then warn that when you give a statement, a CGRS rating, for instance, just like a recommendation or reference, there are present statements that look to past tense about behavior in the past. They don't necessarily speak about future behavior. And so it's important to connect it with the point that Oscar Onyema made about this is not a destination. So it's important to sound that it's not a destination and that the key elements of compliance continue to be monitored. And so the rating system defines what is expected of a good company in terms of their best corporate governance practices. And to the extent that you meet those, it actually does a pre-sieving exercise for would-be investors and attracts investment in that space. But I would also just mention that some of the key things that investors would look at would be A, behavioral governance of the people who are charged with the affairs of managing the affairs of the company. And secondly, and this is very important, where lies the specific interest of the dominant shareholder? Is it residual in nature, in which case it's income minus expense, profit, tax, and then dividend? Such companies exercise excellent corporate governance. Or is a dominant shareholder's interest contractually structured, in which case it's taking out sideways by expense, transfer pricing, shared services, and all manners of things. And these are the things that frighten away investors. So it's a good thing that the CGRS rating is looking at these specifics, and I think it's a good thing for Nigeria, and it's a good pioneering effort by the NSE and the CBI. Thank you.
Thank you, Fabian. I think you're echoing some of what Emma had talked about it not being a marathon. About it being a marathon, ensuring that it's not a tick box exercise, and ensuring that we look below. I think that's what you're saying. So this whole issue of having a dominant shareholder, you could have a situation where the shareholder, ostensibly, there's governance, but things are being done sideways, as you put it. I think that that's very interesting. And I would now like to move on to Brian. And Brian, one of the reasons why I think it's interesting that you're on the panel is because your company actually was one of the first 3 companies that was listed on the premium board. You accelerated your CGRS rating in order to be able to be listed on that board. What were the reasons why your company wanted to be listed on the board? If you can share some of them with us, that's number 1. And then number 2, have those reasons, have you seen in the period of time that you've been listed that some of those reasons have come to, your reasons for doing that have come to pass, have been justified?
Okay, thank you very much. First of all, when we heard about the CGRS program from the NSE, we thought it was a really great initiative, and obviously as the largest company listed on the NSE, we were very keen to be in the first group to be, sorry, a little bit of an echo. We were very keen to be in the first group that went through the process. And I think if you look, we went through the process in 2015, and in fact, we had been focusing quite heavily on our corporate governance, improving it in the years before that. But we really wanted to have an independent body to come in to test us, to see exactly where we are, and had we reached the international standards that we were aiming to achieve. And I have to say, as we worked through the process, while a lot of the things that we have been doing were very good, there were some areas where we were able to improve as we worked through the process, and I think that has sort of stood to us over time. And for us, strong corporate governance is absolutely critical. I think it reflects itself in two ways. First of all, strong corporate governance shows itself through improved operational capability. And I think if you look at Dangote Cement, only a few years ago it was a relatively small company operating only in Nigeria. We're now a very large international company operating in many countries, and we've become a very complicated business. And I think that the focus on corporate governance has helped that transition into a very large company. I think without strong governance, that would have been very, very difficult. And obviously the second area, which we see as very important, is the one that Oscar mentioned earlier on. The stronger the corporate governance in a company is, the more attractive we are to investors. And I think particularly when you look at Nigeria, which is a country with so many opportunities, so many investors want to invest. But the one area that there is always a little bit of concern is corporate governance. So being able to demonstrate that we have international standards of corporate governance, I think the CGRS process has definitely helped that. It makes companies so much more appealing both to debt and equity investors. So I think, I'd have to say the process, we embraced it. I think it had a huge benefits to the company, and I think we ended up being much stronger as a result of it.
Thank you very much, Brian. Based on what you've said, so you feel that the company believes that the effort that went into getting the rating and listing on the premium board has been justified by what has happened in the company, as well as the growth that the company has seen. Talking about growth and marathons and, staying power, Akim, I'd like to go to you again. So I think one thing that I've seen through the comments that have been made is that it's a continuum. Do investors penalize companies because they're still on a certain part of the continuum? Because if we keep saying it's a continuum and you're not at the end, do you get a penalty from an investor because of that?
Yes, the answer is a straight yes. Investors penalize companies that do not align with, that do not have strong corporate governance principles, and they also actually reward companies that have very strong corporate governance principles. We've seen examples even on the Nigerian Stock Exchange in the last couple of years. Companies that were seen to have very strong corporate governance, even when they went through very, very tough, very, very challenging regulatory challenges or economic or business challenges, investors still stood with them. They still asked for those shares. They still bought those shares. They still met the company. They were assured, with the engagements that they had severally, that the company was going to be good, was going to get over its tough times. And we saw also investors that had a lot of negative issues, that did not have strong corporate governance. They did not see buyers for their stock. They were punished, and their share price just came down, because they were dumping their shares. So it's really, really obvious for a lot of companies that when you have strong corporate governance principles, investors would like to buy into your companies. And when you do not, or when you are opaque, you are not transparent, they just move away from you. No matter how well you're performing, they don't like such companies.
Thank you very much, Akim. Fabian, I would like to move to you now, just following from what Akim said. If you're in the role of an advisor of a company that's on the continuum, a company that has certain challenges and is thinking, how do I overcome these challenges? Is a rating system an appropriate way to try and get myself together in terms of making myself more competitive? What kind of advice do you give corporates like that?
Well, at the heart of corporate governance, it's really two key points. And I just like to sort of break them down. One is a concept you use every day, ownership. And I choose to define it negatively. Anything you can destroy lawfully belongs to you. Like this jacket, I can burn it and no one can do anything about it. But the minute I take some money from people to dry clean it, to fit it better, the first thing I lose is the right to destroy it without at least explaining to these stakeholders that it has become necessary to burn the jacket. I lose all of that right when I do an IPO and when I get listed and pulling so many other things. The challenge is that a lot of core investors are not able to separate the fact that they no longer own this large enterprise. You might be the largest single shareholder, but you own shares in the capital of the company, not the company. So my advice would be to look at companies that have a practical and expressed understanding of this concept. Because even when companies seemingly are very successful, seem to do the right thing, you may still find that that element of I own this company has not quite left the minds of the founders or the core investors. The second concept that I look for in advising is, and it's interesting that you awarded certificates to those who went through the awareness, the fiduciary awareness test. Once somebody is incapacitated as a human being, he relies on others. That's why you have a committee in lunacy, in bankruptcy, in all sorts. So a company is in itself a lifeless, no arms, no legs, nothing. So it relies on the people, the board of directors, who then exercise this fiduciary right. Once you entrust to people, you cease to live for yourself, but for that poor, incapacitated entity, now the company. I would look for these two things. No matter how the boxes are ticked, if as an investor, and I know that the Stanbic IBTC nominee would look closely at this, if as an investor I can see, and this is the difference between the reality and the perception. The perception can only take so far, but if you take a close study and see that the twin concepts of ownership and fiduciary responsibilities are not embedded in that entity, it's only a matter of time before something comes up. So those are the two key things that I would urge whoever that I'm advising to look at, and actually inspires me to serve on a board, because directors should realize that it's in itself a risky business to be on the board. And I'll say that again. When a company does very well, the executives get bumper bonuses. When a company goes down, the board members may end up in Alagbon close. Thank you.
Thank you, Fabian. I think you certainly gave us a lecture, a mini lecture, which we didn't have to pay Lagos Business School fees for in that short contribution. But I would like to follow up on one of the points you made, which is about the culture in any country and the culture around ownership of property. And bringing Emma here, given the IFC's scope around the globe with respect to working in corporate governance in different countries, we often hear people say, oh, in Nigeria we have to do things in this manner, in Nigeria we have to do things in this manner. Is that true? Do you see in other countries where the IFC is involved and where you've tried to pursue corporate governance and tried to engender a culture of corporate governance within corporates or generally within the economy, do you see that there's that resistance in other countries as well? And what do you, an initiative like the CGRS that is saying bites the bullet to international standards, how do you see that working in other areas where you've worked around the globe?
So I'm not sure that Nigeria is too different from many of the countries that we've worked in for many of the reasons that Fabian discussed. The nature of business is that it typically starts with a family and then it evolves over time. And so issues of, or how that company evolves in terms of its governance journey will sometimes be a challenge. So, so that's not unusual. We, as IFC, obviously most of what we do is invest in unlisted companies in terms of the equity space. We do have some investment in the listed company space, but most of it is focused on the private space. And we spend a lot of time focusing on corporate governance. We have an internal team to look at it. We have a number of toolkits internally for staff to look at it. So we spend a lot of time looking at it. The honest truth for us is that when we look at our portfolio globally, not just Africa, but globally, and we see, because obviously we've made some bad investments, as any investor would, it happens. And when we look at that portfolio of investments that have not done well, a large majority of the time, it's because of a corporate governance issue or a set of corporate governance issues. And this is globally. It's not just Nigeria or Africa. And so we recognize how important it is to early on focus on these issues as early as we can, bring the tools, the knowledge, bring the sense that that we're working with companies to help them along, but it's critically important to focus on it up front. So to your question around the index and what kind of impact it could have in Nigeria, I think that's still left to be seen. We're still in the very early stages of this. And so we have to track it, we have to pay attention to it, we have to have a very high level of ownership to see it through. So as a stakeholder, IFC is a stakeholder in Nigeria, obviously we want something like this to be very successful. But again, the lesson learned that we've seen in other parts of the world is that you need to have very senior buy-in. And the question will come when there's a company that's very powerful, it's very well known, but no longer qualifies. They've fallen out of the qualification criteria. What will you do? What will happen? When the system is shaken, how will the system respond? And so those are the things I think we have to watch for over time. And I think it's still early days, but obviously we think that an initiative like this could have a very significant impact on companies building their shareholder value and building their stakeholder value as well, not just shareholder, but stakeholder value in general.
Thank you very much, Eme. Given that we're talking about stakeholder value, from what you said, I'd like to move back to Brian now. And Brian, if you were going to advise a company that is reticent about going through the rating system, or is reticent about, now I've gone through the rating system, I don't want to be a peacock that's exposed, like Emma is talking about the companies on the index, people are going to be looking at those companies and saying what's happening to them. What would you say? What would you say to advise such a company, given that you've been on the premium board and you've certainly been out there? People are looking at Dangote Cement and obviously wondering if anything happens, what will be the reaction?
I think the process was very, very useful for us as a company. Certainly the company has been run much better afterwards, and the timing of the process was perfect. It was just as we were about to do our international expansion. So there was a huge level of commitment in the company. We recognized we needed to govern the company a little bit differently because we were managing multiple jurisdictions compared to just Nigeria. I think it also obviously then keeps pressure on us to continue to focus on and to improve our governance. It is an area of significant focus from investors particularly. It's a bit like getting an international rating from S&P or from Moody's. Once you get there, you have to make sure you maintain your rating or you improve it. You can't afford to slip backwards. So I think once you start the process, there's no going back. You have to keep focusing and always improving it. And it's a process that is ongoing forever. And I think, for Nigeria, where there's so much opportunity, strong corporate governance is going to attract investors. So the companies with strong corporate governance are going to be the companies that get the investors. And the one issue I'd say, being on the premium board, we see has been quite significant. We always compare to having a listing in London, and I've done a couple of listings in London, and I have to say the CGR test was actually tougher than doing a listing in London, if I'm being honest about it. I explained this during our investor meetings, and I think one of the things we have to do is work more closely with the NSE to promote that so that the investor audience understands the significance of the premium listing, and maybe at the moment they don't understand it as well as they should.
Very much, Brian. Now I'm going to go through the panelists for your last words, and I'll start with Eme.
You caught me off guard. Last words. So I guess just to emphasize the point I made earlier, what we've seen in Brazil, what we've seen in Turkey, is that perseverance is going to be an important part of this. In both of those countries, we have seen there's been a lot of criticism, there was a lot of skepticism about the process that they went through. They had different processes, but the process that they went through, there was a lot of skepticism, very healthy skepticism, I would say. So I would encourage those of you, I mean, we should look at this as an incredible innovation for the Nigerian capital markets. No question about that. But at the same time, I think it grows in its strength and its importance if there is constructive dialogue and constructive skepticism, and that helps it over time, the system actually improve and become stronger. So I guess I would encourage everybody to look at this as again, we've talked about this being a process, but also to look at it and, make sure that it's doing what it's supposed to do. And the only way to do that is to make sure that market participants are constructively skeptical, and then over time that improves the overall system.
Fabian.
Yeah, thank you. Last words for me will be more on a congratulatory note to the NSE and CBI. It's a new chapter for us in Nigeria that we have this rating system. Most systems have shown that where it becomes a condition for listing or relisting, that corporate governance and behavioral governance is factored into those decisions. There's been significant increase in investments in that market. So we hope that this would translate to more investments in our market. And then on a last note would be to reemphasize that this is something that more people should aspire to get into, and it should be a marathon, not a sprint. Thank you.
Thank you very much. Brian, last words.
Very simply, I'd just say I'd encourage all companies to undertake the CGRS process. I think the company ends up much stronger at the end of it, and certainly ends up being a much more attractive investment proposition.
Thank you, Brian. Akim.
I will just say that, I look forward to the time where research analysts will be quoting and analyzing the CGRS index status of companies listed on the Nigerian Stock Exchange when they are making references to such a company. That will show that corporate governance has really come to stay, and that will encourage a lot of people to ensure that they are high up there when their ratings are being released.
Thank you very much. I would like a round of applause for our panel. Thank you very much.